What is up, everyone? Good morning. It is. Let me just move this around. It is Tuesday, March 18th, and we're coming into the Fed. We talked about this yesterday. The Fed is tomorrow and Wednesday, but the main thing is that gold bugs are going crazy. Gold is at new all-time highs. The gold rush is here. This expansive movement, this inflation-driven market, gold is continuously pushing. Gold broke through the 3,000 area. These are the futures right now that we're looking at. We saw that break above the 3,000 area earlier on last week even. We got significant closes yesterday above the region on the futures, and it continued. Its historic rally right now is up over 1% here on the overnight session, trying to continue that momentum higher. Now, as we look at it, what's driving this gold rally? Only 1 quarter into the year, the yellow metal and melt up is up 15% year to date. It's prompting Wall Street to continue increasing its price targets on the bullion, with UBS becoming the latest to raise projections as investors seek safety amid geopolitical tariff risks. Those aren't the only factors necessarily, with global central banks ramping up purchases to diversify their reserves amidst concerns over growth, inflation, and deficit expansion. So realistically, there is a potential to gain exposure. We have talked about precious metals, specifically gold and silver here at TRADEPRO Academy over a year now, with the potential for these guys to expand higher. There are some miners, right, that you could look at. I personally like the ETF GLTR. It's doing pretty well. Obviously, it's not tracking only gold, but it's tracking a basket of precious metals. The gold bugs indexed HUI is also, sorry, is it HUI? Let me just... There we go. Sorry, the wrong one. I was like, that doesn't look right at all. But the HUI, it's not reflective that well of gold in itself. It's not pushing into all-time highs. It's a classic gold bugs ETF. Also GLD, the Spider Gold Trust. This is where to gain very close exposure to gold. A lot of these are up fairly significantly. You can see a massive gap higher here on the overnight session. As we can look at this, right, miners have operating costs going up in tandem with the metal. All the operational and political risks and specific company risks. They've also historically been terrible stewards of capital. Just play with the metal and use leverage and or derivatives on the metal. Easy, cheap, and liquid. So realistically, I'm not the biggest fan of miners. I'm more so like, if you want exposure, look at ETFs that hold the basket of precious metals like GLTR, or things like GLD that have a closer relation to it. Not all miners do well in these upside momentums. Theoretically, they should when gold is pressing continuously into new highs. Now, right now, we had a decent little run up yesterday. We had some bullish expectations and some bullish pressure in this market. Unfortunately, though, we had a little failure into the close, which pulled prices down pretty aggressively, and still, tech is very, very weak. NVIDIA had a pretty strong run-up over the last few days here, but it's pulling down a little aggressively. Apple had a pretty strong meltdown over the last few days and is struggling to find its bearings. And even here right now, you look at Google, Amazon, and Tesla, they're pretty much near their lows from this most recent drop without actually expanding too much to the upside, while equities tried, but right now, are we in for a turning point back again? I don't necessarily know the potential gravity of the situation in terms of the sell side or a massive expansion today, considering that we do have the all-important Federal Reserve rate decision tomorrow that I think a lot of people have their eyes on, traders and investors alike, especially going into a week where you've got contract rollover, right? This Friday, options and futures are going to expire for the first quarter's contract. On the futures market, like I said yesterday, I've already rolled over. I'm on the M's here on the S&P 500 as well as the NASDAQ, so that's what I'm going to be trading. So we have a very, very news-heavy week, event-heavy week, call it what you will, but you've got VIX expiration today. You've got the Fed tomorrow that could create a massive market move. Going into Fed days, generally you don't necessarily see too much market expansion, more so choppiness. You've also got OPEX on Friday, so expect kind of a tight week. You've got contracts and volume of contracts kind of split between the two current contracts until Friday's expiration. So on the overnight specifically, when we take a look at what's going on with tech, right? NASDAQ, tech, heavy NAS. This is where a lot of the attention is on because we've seen pretty significant downside here on this overnight. Yesterday we failed on the M contract at 20,160 area, and since then we've lost a lot of ground, pulling back under an auction top. I have an auction top area, realistically, that sits around 930, 940. So the best case scenario for the bull side is we just start ripping back through that area and start accepting for that bid higher. I'm going to be very, very attentive to tech today and seeing how tech kind of holds things out because it's been leading some of this weakness. Yesterday, right, it drove some of the weakness into the close, and earlier on in the session, it's been struggling to maintain this kind of a bid. While the S&P, right, 5,700 on the S&P is the auction start. So I really would like to see that area actually hold to start making new highs. I think we can get more of a clearance if we start bidding above 5725 area on the S&P to sustain some of that upside momentum. So it's a very pivotal region. I'm just going to use 5700 here on the SPOOs today. Do or die area, right? If we can hold that bid, let's just start making new highs. If we can't, well, things might start crumbling from there, even before the Fed, which I think might be a tougher sell. I think that there's probably just going to be lower volume, lower movement, and kind of choppy range stuff that goes on throughout the day going into the Fed. But, right, things obviously can be very, very different. So with that being said, I hope everyone has a fantastic Tuesday. Take it slow and easy this week. This week could easily, right, chop things around very, very badly. So just keep that in mind. There's a lot of news events that are expected to partake throughout the week. You don't want to get whipsawed around. So let's open up our live trading room here. We'll see what's going on. Take it slow and easy. Just a handful of trades to start yesterday. All very nice. And today we're looking for the same thing. Baby steps, as this thing is looking a little loopy right now, and the sell side has the potential to really rock this market, right? Little bids here and there, Friday, yesterday, and now what? Right. So hope everyone has a fantastic Tuesday. We'll see you guys on the other side. We'll do this again tomorrow, and